A guide to tax. Let's take an ordinary product through its journey to you and see how many times it is taxed. Pizza dough, made from flour, water, salt, yeast, sugar and olive oil. Pizza sauce, tomatoes, garlic, onions, herbs such as basil, oregano, and thyme. Cheese, typically mozzarella cheese, although other types of cheese such as cheddar, provolone, or parmesan can also be used. Toppings, these can vary depending on personal preference, but commonly include pepperoni, sausage, mushrooms, bell peppers, onions, olives, tomatoes, and sometimes pineapple or other fruits. A traditional pizza can have around 6 to 10 core ingredients, with additional toppings or variations depending on individual preferences or dietary restrictions. Each one of those ingredients will incur a tax. Flour is typically made from grains, such as wheat, corn, rice, rye, or barley, through a process called milling. Harvesting, cleaning, milling, tempering, grinding, separation, purification, packaging. Each of these stages will incur taxes from the machines used, and taxes on all the parts of those machines to the people employed. The type and amount of taxes that farmers pay can vary depending on the country, region, and specific circumstances. In general, farmers, like other businesses, are subject to various taxes, which may include income taxes, property taxes, employment taxes, sales taxes, excise taxes, other taxes. Depending on the specific circumstances and location, farmers may be subject to other taxes such as environmental or conservation taxes, water usage fees, or special assessments related to agricultural activities. And that is just for flour. Now add up the tax on all the other ingredients individually and you get the idea. Transporting a product from the farm to the store. Packaging for a product typically involves several key elements and considerations, which may vary depending on the type of product, target market, branding strategy, and regulatory requirements. Here are some common aspects involved in packaging for a product. Packaging design. The designer will pay income tax and tax on all the products they use. Packaging materials. Packaging materials are the physical materials used to create the packaging, such as paperboard, cardboard, plastic, glass, metal, or a combination of materials. Each of these will pay the various taxes. A haulage firm, also known as a trucking or transportation company, may be subject to various taxes, which can vary depending on the jurisdiction, size of the business, and specific circumstances. Some common taxes that a haulage firm may pay include business taxes. Haulage firms, like other businesses, may be subject to various business taxes, such as corporate income taxes or business taxes imposed by local or municipal governments. Employment taxes. If a haulage firm has employees, it may be required to pay employment taxes, including payroll taxes such as Social Security and Medicare taxes, federal and state unemployment taxes, and possibly other taxes related to employee benefits. Fuel taxes. Haulage firms typically use large amounts of fuel for their operations, and may be subject to fuel taxes imposed by federal, state, or local governments. Fuel taxes are typically levied on the purchase or use of motor fuels, such as diesel or gasoline, and the rates can vary depending on the jurisdiction and the type of fuel. Highway use taxes. In some jurisdictions, haulage firms may be subject to highway use taxes or fees based on the weight or size of their vehicles, or the distance traveled on public roads. These taxes are intended to help fund road maintenance and infrastructure. Sales taxes. Haulage firms may also be subject to sales taxes on purchases of goods or services, such as vehicles, equipment, or parts, depending on the local sales tax laws. Property taxes. Haulage firms may own or lease properties, such as offices, terminals, or parking lots, and may be subject to property taxes on the value of these properties, depending on the local property tax laws. Other taxes. Depending on the specific circumstances and location, haulage firms may be subject to other taxes such as environmental or emission taxes, tolls or road usage fees, or special assessments related to transportation activities. A supermarket, like any other business, may be subject to various taxes, which can vary depending on the jurisdiction, size of the business, and specific circumstances. Some common taxes that a supermarket may pay include business taxes. Supermarkets, like other businesses, may be subject to various business taxes, such as corporate income taxes or business taxes imposed by local or municipal governments. The rates and calculation methods for business taxes can vary depending on the jurisdiction and local laws. Employment taxes. If a supermarket has employees, it may be required to pay employment taxes, including payroll taxes such as Social Security and Medicare taxes, federal and state unemployment taxes, and possibly other taxes related to employee benefits. Sales taxes. Supermarkets typically sell goods and services subject to sales taxes, which are taxes imposed on the sales of goods or services to consumers. The rates and rules for sales taxes can vary depending on the jurisdiction and local sales tax laws. Property taxes. Supermarkets may own or lease properties, such as store locations or distribution centers, and may be subject to property taxes on the value of these properties, depending on the local property tax laws. Excise taxes. Supermarkets may sell certain products that are subject to excise taxes, such as alcoholic beverages, tobacco products, or sugary beverages, depending on the local excise tax laws. Other taxes. Depending on the specific circumstances and location, supermarkets may be subject to other taxes such as environmental or waste disposal taxes, local business license or permit fees, or special assessments related to retail activities. Income tax is a tax imposed on individuals, businesses, and other entities based on their income. The basic concept of income tax is that it is calculated on the basis of the income earned during a specific period, such as a calendar year or a fiscal year, and is levied at different rates depending on the amount of income earned. You have already paid tax on everything you earn. When you buy a product, such as a pizza, or more accurately a necessary product to sustain life, you will be also pay sales tax. As you can see, everything is taxed multiple times throughout its journey from the manufacturer to the consumer. Next time you buy something, such as food to stay alive, ask yourself, is the tax I pay being put to good use? Don't forget to like, comment and subscribe for more videos like this.